So the stock market is finally starting to pull back again after 5 months of a ridiculous run up from the March lows. And a lot of people are asking themselves, is now the time for the stock market to crash again? And the simple answer is we don't know. But one of the things that we do know for sure is that one of the worst things to do in a stock market pullback is to panic and to sell. And I'll tell you why. Over the course of the entire stock market history, the stock market, the SPY, the NASDAQ, the Russell 2000, and pretty much all of the ETFs have pulled back significantly over the course of the history of the markets. And almost every single time the stock market has rebounded without fail. Now, in history, there have been a few very deep recessions, one being back in the early 1900s, one being in the 2000 bubble, and then one being in the 2008 financial crisis. And every single time the stock market has rebounded. Now, what's very common for a lot of people to do when the stock market starts to crash or starts to pull back significantly is to panic sell. And the reason that that's not very smart is because you'll almost find that almost immediately once the stock market begins to fall, it will then begin to bounce again, might even turn into what's called a V recovery, and then it may even then turn around and go down and then come back up some more. And so if you guys take a look at the stock market today, you will notice that the SPY is down significantly, so is the NASDAQ. A lot of the tech stocks are down significantly, 8, 9, 10%. Now on a typical day, a typical stock will fall 1, 2%. It'll go up 1 or 2%. A semi-boring day, it may go up a 0.5%. But it is very, very rare for a stock to fall more than 2 or 3% a day, at least without actual specific news. Well, not today. After about a 5-month run-up of the entire stock market, so much so to where the stocks are up over 40, 50, 60% over the past 5 months, today is the first day to where the markets have finally begun to actually pull back significantly. So much so to where Apple itself was down over 10% after hours. Tesla was down over 10% after hours. We also have DocuSign, which has been a darling of the stock market over the past 5 months. That was up almost 200%. Well, that's down over 15, 20% after hours. And so what you're seeing right now is a huge rotation of the financial institutions rotating their money out of the tech sectors and potentially put it into some more lagging sectors. And so I want to encourage you guys that if you're going to invest into the markets, to not look at them on a day-to-day basis. Keep in mind that stocks do and can and will go into what's called a correction territory. And that's usually when the stock market begins to pull back 20% or more. Now, we're not getting correction territory because, again, this is just the first day, at least from the total stock market. Now, there are a lot of stocks that have actually already hit correction territory, such as DocuSign, that is down over 20%. Apple, Tesla for sure is one of them, and then Apple, which is a little bit over 10%, but it's very, very close to the correction territory, which is a very, very unique thing considering that as of literally 2 days ago, every single stock on the stock market looked completely invincible, but now not anymore. So if you guys are checking your brokerage accounts and you may see that you're down significantly or that things are starting to drop, I highly encourage you to not panic. What I do encourage you to do is to do something what's called dollar cost averaging. And what that is, and this is something that a lot of institutions do and a lot of smart investors do, is that when high quality stocks that have good earnings and stocks that you know that you trust, such as the Apples, the Coca-Colas, the Microsofts, the Walmarts, and so forth, when those stocks begin to pull back, people then begin to actually add. That's something that a lot of very wealthy people and institutions did back in March. So much so to where I read an article just recently on Forbes.com that stated that a lot of the wealthy institutions and investors, they actually went out and obtained loans from banks in order to actually get additional investings into the stock market during the crash. And so keep in mind that a lot of the wealth distribution takes place when stock markets pull back and actually crash. So I want to encourage you guys to make sure that you're doing things very smart, you're doing things very diligent, that you're doing your research, and that you're actually doing the same things that a lot of the wealthy investors do in institutions, and that's buy low and sell high. And so a lot of the money gets made in the stock market when stocks are going up, but you really have a chance to reposition and to rebalance your portfolio when the stock market is going down. And this is actually one of our first opportunities to be able to do that since the March lows. And so what I am looking to do for my personal portfolio is I have a number of stocks that are on my watch list that I'm looking to add to. One of them being Apple. Apple's a very, very big stock. It is actually the first $2 trillion stock in the entire country. It is a significant stock. It is well known, as well trusted. They have a phenomenal balance sheet. They have more cash, not actual net worth, but actual cash on hand than any company in the country. So Apple's not going anywhere. The entire stock market as a whole, like I said, is starting to rotate out of tech just because it's so overbought at the moment. And so as Apple begins to pull back 15, 20, 30%, I will begin to add an additional 20, 30, 40, 50% of my portfolio potentially to Apple. Now, depending on your portfolio size, you may not actually want to do that much. You may want to just add a couple of $100, buy a couple of shares, and so forth. Irrespective of your portfolio, it doesn't matter whether you have a couple of $100 or a couple of millions of dollars. It's important to make sure that you guys are dollar cost averaging. That is the safest, quickest way so that you can sleep at night and you can take advantage of these pullbacks that are happening such as today. So if you're looking at your brokerage account, I want to highly encourage you guys to not panic. Don't decide to flat out sell. We did make that mistake a few months ago, and as you guys can see, it was significant if you did actually make that, because you would have missed out on those ridiculous gains, especially if you were in a lot of the tech stocks. And so one of the smart things to do is to, if anything, look at rebalancing, look at potentially taking some of the profit off, trying to limit your exposure in some of the tech stocks if you guys are heavily exposed to tech stocks, and maybe trying to balance out your portfolio a little bit. But again, I just want to make sure that you guys are just making sure that you are investing smart, you're investing very diligent, and keep in mind that with stock corrections, they do happen, they will happen, and that's where the money gets made. And so, do I think that we're going to have some additional downside? I do think that we are. Now, keep in mind, no one knows exactly how far we are, but I do know that the stimulus package is something that's going to weigh very heavily, I think, based on the direction of the stock market. Another big thing that's going to weigh very heavily on the direction of the stock market is the presidential elections that are coming up in the next few months. So between those two things, we have a lot of volatility that may re-enter in the markets after having 5 months of very stable upward trend patterns. And so these are the opportunities to where regular investors such as you or myself have the opportunity to actually make some money. And so what I want you guys to do is just keep an eye on the markets, make sure that you have a watch list of clearly defined stocks that you've been wanting to purchase, and don't be afraid to hit the buy button. Yes, it may bounce back next week, it may bounce back next month, it may take a few months, it may even be actually the end of next year. But keep in mind that you will be better than you were before you hit the buy button if you're patient and diligent. Always keep in mind that when it comes to the stock market, the patience in the stock market always exceeds not having patience. And so time in the stock market always exceeds timing the stock market. And so just keep in mind, guys, that yes, we are going to probably enter a stock market correction. It is perfectly normal. And if we, in some unforeseen circumstance, enter more than a correction, which means that the total stock market falls more than 20%, just further add to your portfolio. Obviously, I want to encourage you guys to never invest any money that you cannot afford to lose. No stock is impenetrable to losing money or to potentially ever going down. And so just make sure that you guys are investing money that you can actually afford to put away for the next year or two. And if it bounces back even before then, and you're up 30, 40, 50%, great. So just make sure you're putting money to the solid stocks and you're being patient and you're not missing it. You're not checking it on a daily basis, because that will cause you to panic to sell, or that'll cause you to panic to sell when it's going up or going down. And just make sure that you guys are being very diligent. That's it. So just keep in mind that I want to leave you guys with this. Dave Ramsey, who I actually follow, and I've read his book. He's a great mentor online, and just with a lot of people, with other millionaires and with average people such as myself, who stated that, in the last 2008 stock market crash is actually where he got a lot of his wealth from. He said he made a ridiculous amount of money when we had the stock market crash. And I just want to encourage you guys that if you are a regular citizen and just kind of working a jobs and so forth, that you can do the same thing. And these are the moments when we actually do them. And so just make sure you guys are add to your tech stocks, add to your Walmarts. If you have an ETF, maybe add to a few more ETFs. We'll be making a couple of videos on some what ETFs are, their exchange traded funds, and kind of giving some recommendations to some of the safe ones that depending on what your risk tolerance is. And, let's just kind of make some money. So, like I said, guys, do expect some volatility into the markets in the next coming days, a few weeks, and actually probably for the month of September, because September is statistically one of the worst performing months of the stock market. But you can absolutely rest assured that over the next few months, or I'd say even following into the following year, that we're going to be in a lot better position than we have been pre-March. So thank you guys so much for tuning in. I hope you guys found this video very valuable. And if you have, I highly recommend that you guys subscribe to the channel. So this is a stock investing and stock education channel. This is where we provide a lot of the insights and information, a high-level overview to kind of help put you guys in a position to have financial freedom, financial wealth, and to keep you guys up to date. If you did also find the content very valuable, make sure you guys also like the video as well. That helps us out tremendously for the YouTube algorithms in order for our channel to grow. And make sure that you guys hit the notification bell, because I will be uploading videos very shortly to keep you guys up to date. So thanks for tuning in, and I'll talk to you later. Take care.